Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Let's take a look finally on the euro currency. So on the last week we mostly haven't paid any attention to euro currency. Mostly we were focused on some other currencies, on Great British pound, and currencies of the Asian region, so Japanese yen, New Zealand dollar. But right now we will make an update on our view on the euro currency. Actually, this is not just an update of our medium-term view, because here we do not have we haven't changed our position, so we still think that medium-term perspective euro currency has created the background for destruction of the bullish setup that has been formed here since the last of 2016. And in medium-term perspective, the chance on downward continuation looks really significant, because those of you who follows our weekly research probably could read with some details about the background that's now is forming around the United States dollar, because this drop mostly has no relation to the euro currency directly. This mostly the strength of the United States dollar. And in the last 2 weeks, as you can see, the overall situation, the sentiment around the strength of the United States dollar has changed, especially this stands in relation to the Fed policy, to situation around the domestic political sphere of Donald Trump. And today also we have placed the update on the situation from the Fed and Consulting in our weekly research. Very good material, very good article dedicated to treatment of the tax program by the Donald Trump, how real it is at all, how fast it could be started, the view on some Obamacare canceling, in the voting problems in the Congress, what's really to expect. And in general, Fed and Consulting is coming to idea that it's not really hopeless as it trying to be shown in the mass media, the newspapers, and the internet. In reality, this process stands underway. It's just should start somewhere close to 2017, and the Fed and Consulting thinks that now is really great moment for taking the short position on the euro currency, or better to say, good moment to take the long position in the United States dollar, and short position on the treasuries bonds. So if you would like to know the detail, just read. It's not really very big articles, but very informative. So speaking on the short-term perspective, on the technical stuff that we have on the daily chart, guys, here is our logic. So why we think that downward action should continue? Mostly it stands with this action. That's the core of our scenario. Why? Because for a long period, guys, here we were watching for forming of the hand and shoulders pattern. If even we do not want to treat it as the hand and shoulders, because it's really a bit ugly, it's a bit skewed. If even we will treat it as the triangle, this conclusion, we could make the same conclusion actually. Because take a look what has happened here. First of all, market was challenging this resistance 3 times. From the hand shoulders point of view, this is the neckline. And that's the final challenge that has happened. And actually here, following the logic of this pattern, market should continue upward action. We have used here not really extended target. The only thing that we would like to get is just completion of this A, B, C, bottom, D pattern that should happen somewhere around 110 area. So market hasn't quite reached this target for just very small distance. But the action that has happened after that breaks overall background, bullish background. Why? Because market has shown the breakout neckline standing above the euro pivot point, but then suddenly has dropped back below the neckline. This is not normal behavior for the hand and shoulders pattern. But this is only the half of the problem. So when this has happened, when market has formed this candle, we said, well, it's not a strategy. We could accept minor retracement. We could accept 108, 107, 60 area. Here was, by the way, intraday confidence support. That is acceptable retracement because here is the gap, so market could show minor retracement. There was also target 618 extension of this large ABCD. But as soon as market has collapsed here and dropped below the monthly pivot point, that was the signal bar that overall this contraction stands under the hazard of the destruction in a medium-term perspective. Because this is irrational behavior to the overall bullish. The market should not show such kind of retracement from such depth as it shows right now. So this leads us to a major conclusion. So we should understand that the major reason why we think that downward should continue is not just because we have this plunge down, but because we have the breaking of the bullish setup. And the failure of this pattern leads us to a couple of major targets. The first one stands here. This is the bottom of the right shoulder. Second will stand below the head. So that is medium-term targets that we have. Also, guys, pay attention how market really weak is. So first of all, it's dropped below the monthly pivot, but also here was our confidence support. It's rather strong support area on the daily chart. But what we have seen here, no actual response. Flat action for the 3 sessions. No visible bounce that we have discussed in our last update on euro currency. No retracement, just flat action and breakout. So market has dropped through confidence support on the daily chart without no respect to this area. Now I'm asking you about the false thing. What the chances that just single fib level will hold market from the further drop? And what chances that trend line will hold market from the further drop? Definitely both of these levels are weaker than the confidence support. And it means that chances that market will stop dropping here is very small. By taking a look from the triangle perspective from this construction, take a look here, we have actually failure breakout. So market has made an attempt to break through this area, showing the wash and rinse of this top and that top, and dropped low. It means that when market fails to break triangle in one direction, it should break it in another. And this trend line, by the way, is lower border of this triangle. So that being said, following this logic, we think that as the trend line, as the fib level has very small chance to keep this plunge. Unfortunately, we do not have here any clear ABCDs, some patterns that could point the precise short-term target. The only tool that we have here is the flag pattern. So applying the classical approach to estimating the target, we should use the mass of the flag and count in the direction of the breakout, and this will lead us approximately to monthly pivot support one that stands around 104.60. That probably our next destination point. Market is not oversold here, so it easily could reach this area. So that's our major analysis on the euro currency. That's why we think that downward action probably should continue. On the intraday charts, guys, it's also not really a lot of information. What we have also very gradual action down, no actual bounces here, just flat consolidation breakout. Still, as market stands at some support here, minor retracement could happen. But we could accept only minor retracement. What I understand with the minor. Minor is 106.50, 106.70 around the weekly pivot resistance one. Why? First of all, from the pivot point framework, we know that any upside retracement should be held by the weekly pivot resistance one with the bear trend. If market breaks the weekly pivot resistance one, it tells that this is not just retracement, or at least it could be a prediction could continue on the next week. That's important conclusion. That's why this is important. But what is more important is that if market will break the 106.65, 106.70, in this case, price will return back inside the body of the flag pattern. And this will be not good sign for the short-term bearish perspective. That's why we will be watching on the 4-hour time frame chart for this possible bounce. Besides, the deep retracements also will be not quite logical for a bear market because market is not oversold here. So the only thing that we have is the trend line, but market is coming to it on this strong plunge and after failure upside breakout. That's why significantly increased chance of the further drop. So that's our analysis on euro currency. Let's see how situation will develop in the next week.